Hello, everyone, and a very warm welcome to today's major markets update for Friday, January the 24th, 2025. Yes, January is almost behind us already. And I must say, we have a little bit more clarity. There is a little bit more focus. And our kitty is spying five potential waves up from the January 13 low on several indexes, not yet all. So this is really good news. And with that, remember, once we have five waves up, we will see a correction followed by another five waves higher. That's the real message here. So let's go straight to the charts and see what we have. All right. Enough of the fancy AI generated slides. This is the NASDAQ 100, and based on closing prices, where down days are second and fourth waves, or B waves, for example, we have, in this case, of the January low, 1, 2, 3, 4, 5 waves up. Okay, so far, so good. Now, we must admit we've not even closed below the first warning level of this advance since the January 13th low. So we haven't even broken below the first warning level to tell us that there is potentially a top in place. But we can now count five waves up. Okay, very clear. 1, 2, 3, 4, 5. This shows even better if we would draw it as a line chart. Okay, let's look at this. 1, 2. So that actually doesn't even show. Hey, that's really interesting. I swear we had a down day there. It's absolutely amazing. What? Excuse me. No, that is a down there, and that is a down as well. I swear that is down. Okay, let's go through it day by day. I'm not trusting this line chart. I'm trusting my own eyes. That's an up day. All right, so down here, minus 0.13%. That's a down. Okay, then we had up, and then we had a down, a minus 0.69. So 1, 2, 3, 4, exactly right. And then we had, of course, the subdividing wave 5. Sorry for scrolling through this. That might be a little nauseating, but that is indeed 5 waves up. There's nothing wrong with my eyes. All right, 1, 2, 3, 4, 5. I like it. So potential pullback underway to ideally somewhere around 21,250, somewhere around there. All right, this target zone. And then 3, 4, and 5. Okay, so this is what we're looking for. Stock chart has, of course, messed up again these levels. I don't know why it does that. It is really beyond me, but oh well. We'll keep chucking along with this less than ideal stuff. Excuse me, and we thus have here then the wave 5. 200% ideal target, and then we have, of course, here the 176.4. Not too bad, not too bad. So that would then be the wave 5 target zone. Sorry for that, guys, but and girls, of course, but you get the idea. So then the minimum upside target is here, 22,826. Potential as high as 23,975. For standard 5 is 1 relationship. But we can always, of course, extend higher, as you can see here, where we are going into almost 25,000. All right, if we see 5 waves up. I don't know if we're going to see an ABC, which will suffice, or a 4 and a 5, which is, of course, picture perfect from a standard Fibonacci-based impulse pattern. But the A, the B, and the C will suffice, because that's also what we got here, an A, a B, and a C. And you can see here very strong subdividing wave C of 3. Okay, so again, after 5 waves up, expect a pullback and another 5 waves higher, which is then the C wave or the third wave to be determined. And as you can see here, assuming we bottom somewhere here in this target zone, right? We get very good confluence around that red target zone. So that red target zone, which is either all of 5 or 5 or 5 or 5, yada, 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 or it is just a 3, we get a 4 and another 5, which I will show you for the Dow Jones. And it wouldn't surprise me if that's the case. However, we have no confirmation the top is in place yet. From a hourly perspective, this is the hourly chart for the NASDAQ. I shared this one, I believe, on Wednesday with you. And some of you asked for it, but what happened to it? Well, nothing happened to it. It's still valid. And these are the labels I placed. And as you can see, we didn't miss it by much. So 8 can be moved here. And then 9 is then today's high. So that is then this extended wave 5. And again, the hourly chart now matches very well with the daily chart. So our preferred wave count is that we have topped for this H/1 without any single confirmation that this is the case. Okay, we haven't broken below even the first warning level. That needs to happen. Okay, that needs to happen to really tell us, okay, we have this top in place. What I'm going to do is raise the second warning level to this high here. And let's put it right there at the close, I would say, and that is at around 21,555. Okay, let's move that one up to give us a better indication that we are indeed topping, 21,555. All right, everybody agrees. And then, of course, the third warning level that we will not see higher prices is 21,085. And the ultimate line in the sand is, of course, the January 13th flow. But I'm 95% certain that will reach this upside target. That's my confidence. That's pretty high. For those that have been with me for a while, you know, that's pretty high because, you know, I like to dabble in uncertainties. It has suited me well. Again, the hourly chart now aligns well with the daily chart. Okay, so I like it. 1, 2, 3, 4, 5 with an extended wave 5. 9 waves up can complete a impulse. Can always turn into 13, by the way. So as you can see, also here, we haven't even closed below the first warning level, 21,756. I've placed the second warning level for the hourly chart at 21,620, which is, of course, a little bit higher than 21,555 on the daily chart. But this is a hourly time frame chart, so it's definitely different. And then the warning levels accordingly. So it depends on what you're trading off, what you use for your trading decisions, hourly chart or daily chart. I prefer the daily chart. It's a little easier. It's a little more relaxing. I have a lot of other stuff to do besides tracking the NASDAQ. I also have tracked NASDAQ, this S&P and 1,986 other indexes. All right, and then the alternative wave count is, since we have not broken below even the first warning level, meaning we have not had a daily close below it, is that we have this subdividing wave 5. It is still possible, okay? Again, we have 5 waves up, but it can turn into 9. So then this was 4, and then this is 3, and this is another 4, and then we have another 3, another 4, and then the final 5. Okay, it's still very possible. Again, we haven't even broken below the first warning level. Okay, so really below 21,620 on the hourly chart and below 21,555 on the daily chart, daily closing prices. That will give us the indication this 2B is underway. I really hope it's going to happen. Why? Because it will set up such a much better profile slash path pattern on the chart to really nail that wave 3C underway. Okay, that'd be fantastic. So for now, the ideal preferred wave count is that we've topped for this wave 1, with the caveat that we don't have confirmation of it yet, but we do have 5 waves up. Okay, that's the preferred path. So please take that into consideration, that we can still subdivide higher without any of this confirmation that we have. Just because we can count it this way doesn't mean it is the absolute truth. So moving on to the regular NASDAQ. Also here you can see we don't have 5 waves up on this one yet either. So we can still push a little bit higher. It would be really nice if we get this wave 5s up, but it is not necessary. Again, the whole advance, it's the September low into the December high was 3 waves, okay? An ABC for A, an ABC for B, and a ABC for C. So this can then easily, as I shared with you before, also turn into ABC. Okay, nothing out of the ordinary here. This still looks really nice. ABC 1, 2, 3, potato, right? Kind of the same deal. So then we top for 1, bottom for 2, and then we have 3, or we top for A, we top for B, and then for C. The overall pattern is the same. Then the only differential is, are we then going to see a wave 4 and a wave 5? That remains to be determined. That I cannot predict. So those that slap a wave 1 label on it, therewith say that indeed we will see 5 waves higher, because otherwise you have to slap a and a 1 label on it, because you don't know if we're going to see 5 waves higher. And you don't know. That's really the truth here. You don't know if we're going to see 5 waves higher. Okay, especially considering that this is not really a clean 5 waves up. If you can make it 5 waves up, please share it with me. I'd love to see that. I cannot make it. Okay. And again, a ending diagonal doesn't have to be all threes. I can pull up a couple examples where leading and ending diagonals are quite messy. It can be a 5-3-3-3-3 or a 5-3-5-3-3 or a 3-3-3-5 setup. Okay, there's no hard rule. The reason is that when Mr. Elliott determined the diagonals, there was very little data available, and it's one of his least studied price patterns. And now that there's more data available, I think we have a lot of examples where these diagonals are quite different from each other. And I'm glad to share those with you from earlier this decade, where we have some very interesting overlapping diagonals. All right, that aside, so bottom line is that even after 5 waves up, we expect a pullback and then a next leg higher. That's really the bottom line. Can't just count it yet on the NASDAQ, can't count it for sure on the NASDAQ 100. So our preferred primary wave count, once again, is that we've topped, we're in a pullback and then higher, with the knowledge that we haven't gotten any confirmation of it yet. But the hourly chart matches with the daily chart. That's often nice. All right, moving on to the S&P 500. Also here, I haven't moved anything. And as you can see, the 8 and the 9 were very well placed. I guess that's because I know my stuff. And so also here, we can count a extended gray wave 5 of this 1/A wave. So we can then raise this Fibonacci retracement zone. And you can see we have some negative divergence. But again, we haven't even closed below the first warning level. So indeed, we have counted enough waves up. But again, it can turn into 13 waves, right? We can add 11, 12, 13. And that is our alternative wave count, okay? The alternative wave count is this one, the subdividing 3, 4, 5. It will just keep on subdividing. Okay, even below 60.76 is still not the end of the world for the bulls. That's just the first warning level. Below 59.63 for this gray wave 4 would be very detrimental for this subdividing bull case. And below 60.15, I would already throw in the towel, so to say, and then we can see if the judge wants to pick it up and accept our defeat. Okay, so that's where we're at. And yes, we can place a 1A label on it. I can't really see it on the daily chart on the closing basis. But again, the hourly chart counts very well. Remember, we topped right here for this wave 3 at 161.8. We bottomed a little bit north of the ideal wave 4 target zone. And then we have this very extended wave 5. Okay, that's where we're at. Versus continued subdivision higher. Not really out of the woods yet, but I think there's a lot more clarity. And we go with the finalization of this impulse as our preferred wave count, knowing that we have not broken below 60.76 even, okay? But it looks good. Dow Jones also would look a little bit better with a last wave 5, maybe with some negative divergence. So maybe Monday, Tuesday, we see a little bit more of a rally. All we need is just a close above Thursday's close, and then we have 5 waves up, and then we can start to roll over for our wave 2. So I don't have confirmation yet. Again, we haven't even broken or even gotten close to the first warning level. So it's all a little bit premature, but it starts to look good. Again, there is some clarity. And again, I can spy with my little eye 5 waves up on some indexes. Okay, so that's really good. Not all, but some. And then again, let's move on to the bigger picture. We believe we are in this wave 5 of this wave 3, a 4 and a 5. Okay, so that is since the 2020 low. This is actually now our preferred wave count. So there, I'll take that one away. Might be a little bit confusing. And we should now be in this red wave 5. And after red wave 5 comes black wave 4, which might be also a year long. And then we have another yearly sequence since the 2020 low, meaning up, down 1 year, up, 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 down 1 year, up. And that's then it. Alternative is that it is a irregular B/2 wave, but we're now already above the third warning level for the bear. So this is most likely not the case. And this shows you that, okay, just because you can count it this way, you should not trade it this way. It's an alternative. We always trade the preferred wave count. This would have ripped your face off. I would not see a reason at all to short this market. Not at all. Okay. Even I can count now 5 waves up. I have not initiated any inverse short or put position at all because we haven't even broken below the first warning level on the S&P 500, on the Nasdaq 100, on the Dow Jones. So why bother front running stuff? Please don't. Semiconductors, this is our preferred wave count. And I've raised the warning levels for the bears, which is now, of course, Wednesday's high, etc., etc. So you can see the warning levels for the bears with the ultimate warning level 59.35. Why? Well, I had some more time on my hands today, and that is because this is the bullish wave count. If we so desire to count this mess that we have so far since the August low as a bullish wave count, then the August low was wave 4, similar to the other indexes. Then we had a wave 1 here into August, real quick, a wave 2. Okay, don't bother too much about these labels. I'm going to take them away. They're off because they're just copies of the previous chart. So wave 1 and a wave 2, another wave 1, another wave 2, another wave 1, another wave 2, another wave 1, another wave 2. So this one should soon set up for a third of a third wave. Here we have then a expanding leading diagonal wave 1. Here we have another expanding leading diagonal wave 1. And here we have a simple impulse wave 1. Okay, so the warning levels for the bulls are on the charts. If we break at any moment below 4925, forget about this. Again, this is both wave counts, least certain compared to the other indexes that I've covered so far. Why? Because of this overlapping nature, right? We're now at 53.41, which is where we were pretty much in September, October, November, which is where we were in August, which is where we were in July, etc. So we have not seen much of a trend. Trendless markets are often very difficult to wave count, and this is a super overlapping mess, but I can count it this way. Just because I can count it this way doesn't mean it's the correct way, as I have this one as well. Both are pointing higher, but this one is going to point tremendously higher. Okay. Also here, 5 waves up, 1, 2, 3, 4, 5. We technically had straight up, but these days where we opened and closed lower, well, opened higher, closed lower. That's the correct way to define these candles. We opened higher, closed lower can be second and fourth waves. Okay. Again, we're not yet below the second warning level, but we're below the first warning level. So this looks really good. A 1, 2, 1, 2, 1, 2 setup would be amazing. And then we're going to blast off pretty soon into the 7,000s. Okay. Not saying it will happen. It's still a potential. I'm merely pointing out the potential on how to wave count this sideways mess with this still the preferred one. Why? Because it's so messy, and if it's so messy and not a clear trending market, I prefer to be a little bit more on the cautious side of things. All right, on to the IWM. I have nothing new to say here. We haven't even closed below 227. So that's really all there is to it. Okay, yes, the 50-day was a stiff resistance, and that's about it. Looking at market breadth, the S&P 500 has now 55% of its stocks bullish, a little bit more than the majority. So far, so good. That's good. We've reversed from very low levels to above 50. How we're doing on the AD line? Well, remember this chart where I pointed out if you see these breakouts, the market will most of the time rally higher with maybe an occasional fake out, right? That's about it. Okay. That's really the gist, and that's what happened. This is really what you have to look at when AD line starts to break out, but price hasn't yet. It's a good leading indicator. So this confirms our study. And how we're doing on the McClellan oscillator. This is the weekly chart. I'm going to pull up the daily chart. It's still positive. So still the bulls are in charge. And remember, we had a reading of over 100. And let me pull that up for you real quick. And let's see here if I can find it there. And all those readings above 100 told us that we will see continuation over the long term. Okay, anywhere from, I would say, a few months to a few years. And that matches once again with our preferred wave count, where we're looking for a continued rally. This wave 3 here will last something similar, a couple of months. Okay, I think about 2-3 months, something like that. Wouldn't surprise me at all if that's the case, this wave 3C. All right. So that's good. We're still in a bullish regime from a market breadth perspective. So dips are to be bought. And that, of course, means the SI indicator, SPX SI, continues to rise after its buy signal, I think January 15, somewhere around there. So also this is a confirmation of the bullish case. How we're doing on the PMO? Well, that one is now at 100. Wonderful rally. The signal has been confirmed from the buy that we got earlier in the month, and the secondary buy signal that we got mid-month, and then the confirmation by the KST indicator, the smoothed out indicator of these sometimes a little bit overlapping rough signals. But again, 60% of the time, everything works all the time, right? That's how it works. Please remember that. Nothing works all the time. There will be some nasty signals. Like, for example, this one here earlier this year. Look what a ugly advance that was on the PMO buy all sell all indicator, but the market just moved higher. We don't always get it crystal clear. And then last but not least, our little bit longer term indicator turned already bullish, I believe January 15th, and remains bullish for today as well. Let's see if it has updated. And yes, it looks really good, meaning the black line is above the dotted line, long-term uptrend. Long-term uptrend means for several months, okay? That's pretty much, I think, the preferred time frame we're looking over from a certainty perspective, okay? Very short term is, of course, least certain. Very, very, very long term is, of course, also less certain. And somewhere in between is really where the Elliott wave, I think, is at its optimum. So there you have it. If you have any questions, please let me know. I think it's quite clear. Our preferred wave count is for 5 waves up. But remember, we don't have any confirmation from price yet. We can count it that way, but we don't have any confirmation just yet. So we're expecting a pullback and then higher, okay? And after 5 waves up, expect at least 3 waves down and another 5 waves back up. With, of course, the caveat that we might see this subdividing wave 5 continue its advance because we have no indication that we've broken below any critical warning levels. If we see that happen over the next few days, it really, of course, will provide more clarity. But for now, again, there is more clarity, and we can spy with our little eye 5 waves up for several indexes with a extended 5th wave, and that's really nice. So let's see what we're going to get next week, and we'll take it from there. Take care, trade safe, and I'll see you all next week.